Yeah, we're kind of in heads down building mode right now. So the team is working with an internal alpha. We've got the exchange running and the app running, and basically we're running testnet trades on that right now. And so the stage that we're at right now is we're basically iterating on the product. The kind of when you get the first version of the mobile app based on the designer's spec, there's always some things that need to be refined, as static designs don't always play out the same way that a interactive app does. So that's kind of the stage that we're at right now with our alpha. And then at the same time, we're building out the margining system and connecting with different market makers. So yeah, we're pretty excited to be getting into private beta in November, and kind of dripping out early access to the app in November. I think later this week we'll be detailing a little bit more of our roadmap and our plans for the beta. But that's kind of where we're at right now. Is there like a way for people to raise their hand or something if they have something to say? Hello? Hello?
Somebody was off mute for a sec. Don't know.
All right. I'm trying to figure this out. Who on our team is moderating the muting right now? I would like to, open it up. There are quite a few people in here, so I think that opening it up to everyone would be.
I think what we can do is, maybe use the AMA channel for people can just like post questions in there.
Cool.
And so then I can see any questions in there and be able to answer them.
All right, cool. Yeah, or people can. So we'll use the AMA channel. You can type a question, or you can raise your hand, and then we'll figure out how to unmute you as well, and just like put a hand emoji in there or something like that. Somebody just asked, do you think you'll be able to attract HFTs on PowerTrade? That's a good question. So I've been speaking with a lot of market makers recently. They're a very secretive bunch. They don't like to reveal who they are or what they do, and they're not public at all. But the general consensus in crypto is that there really isn't that much HFT trading in the traditional sense, and that's just because the market is still too immature, particularly with crypto exchanges being located all over the world, across Asia, Europe, and the US. So the HFT trading hasn't really happened that much in crypto. We might see that it begin to evolve in a few years. And our exchange tech is actually ideal for them to do that, but it's just not happening in crypto yet.
And I can add that was one of the things that we considered when making an investment in PowerTrade. Was my partner Josh had previously started a high frequency trading firm over a decade ago in traditional markets, and so we were looking and talk with the technical team to understand, did they have the infrastructure that would be able to support the types of things high frequency traders would need. And the answer we came away with was that yes, that this did seem like they were going to have infrastructure capable of supporting it. Obviously not right now, and we're not active in that space at this time. But it is something that the PowerTrade team has thought about, and that we thought was important to have as part of the overall platform.
Yeah, and it's interesting. Like we at first we thought that maybe co-location, and in the typical equities world, co-location is like, super critical. You got to have your server right next to the exchange's server, and so we thought that might be something that market makers would want. But at the end of the day, most of them are market. If they're trading on one exchange, they're kind of hedging it off on another exchange. And so even if they can co-locate, that is, they have a wire directly to our server in our data center. Even if they could do that, they still have to go and talk to another exchange that's somewhere else in the world. So there's still that massive latency elsewhere.
It's the crypto markets are just so inefficient right now.
Yeah.
You don't there are dollars to pick up. You don't need to worry about picking up those pennies.
Yeah, exactly. All right, somebody asked about NFT hype. In May, we've seen incredible DeFi hype, but we could say that the DeFi craze is pretty stable right now.
Actually, before we get into all the questions, should we talk a little bit about liquidity provisioning and PowerTrade, kind of yield farm and PowerTrade? Yeah. Because I think that's probably what some people came for. Because I think that was part of what was talked about. So, when Tom asked me to do this, I was kind of like, I don't want to leak alpha here, but I figured if I didn't do it, Tom was going to find somebody else to talk about it anyway. We my firm actually, although it says Boxone, we've just rebranded to Nascent. So that's actually our alpha leak of the day. Is keep an eye out for Nascent. We'll be making some more announcements soon. But if you look at the ETH PTF pair, which is what is being incentivized right now, the total liquidity there right now is around $345,000, which is pretty low. It's pretty thin, and so that means a few things. Like one, the rewards here are pretty astronomical, and we started LPing pretty much right out of the gate, and so I think it was around 53 cents or something like that per PTF at the time, and so now it's at like 15 cents. So that's pretty crushing from an impermanent loss perspective. So there's a loss from that perspective. However, the rewards are quite substantial. Now, this pool is what in yield farming terms we often refer to as a pool 2, which means it is the token that you are receiving as a reward is part of the pair. And what that often means is that people who are purely looking for dollar denominated yield are harvesting their PTF and are directly selling it into this pool, which tends to cause a lot of downward pressure on price and can lead to a lot of impermanent loss. And if you bought PTF at a high price, it can lead to a loss in that as well. So what I would say is, this is not a like super low risk strategy. There is meaningful risk here. The fully diluted market cap for PTF, I believe, is around $60 million. And while I don't think that that's crazy, it is obviously a pre-launch product right now, and so you can look at that in various ways. And what I think is important here is like this is, I think, in my view, something that's compelling if you are looking to hold PTF longer term. I think if you're looking just for those dollar denominated yields, this is a very risky pool to play around in. And if you know what you're doing, you can probably do it and do it relatively safely. But it's not like an easy beginner thing to do. So if this is like your first foray into yield farming, I wouldn't suggest putting a lot of money into this. I do think it's a good place that if you're a long-term investor in PTF, this can be a way to effectively average in and get additional rewards. But I would caution people not to just like crazy YOLO into this. Do your diligence, make sure you understand what's going on here. I don't think it's unreasonable to take a stance of like, I want to wait until it launches and prove it to me first. But this is where rewards are being offered right now, and also I've said we've been participating in liquidity provisioning on this, and I think it's we're very bullish overall about the PowerTrade team and about what they're building here, but. I don't want everyone to go in and be like, Dan says this is a great buy. I'm not saying this is a great buy at all. I'm saying that right now the rewards, if you do the math based on the rewards being given out and based on the current liquidity pool size, the implied yields are quite high. That is likely due to both this project not having a huge public profile yet, and also the risk associated with it. You don't get high yields without significant risk.
So for people that are long PTF, for instance, for you guys, have you done like any sort of like a dollar cost average calculation on kind of what this program has done for you guys, having been participating quite early?
No. To be honest, we don't have an exact outcome for that. I will say, overall it has added to our PTF position. You know, we have sold some of what has been farmed for more ETH to LP with. But overall, yeah, it's been effective at increasing our PTF allocation.
Got it. And if anyone has any questions about staking and Uniswap LP, do drop them in the AMA channel, and we can chat about them. Yeah, I don't know. Maybe we can talk a bit about impermanent loss. What is it? Is it appropriately named? What does it mean?
Yeah, impermanent loss is really poorly named. I think even the person who coined it has changed their original post to I think they call it dynamic loss or something like that. It's there's a very good chance that impermanent loss is permanent. The case in which it's impermanent is if you expect mean reversion in your pair. So if you enter a liquidity pool and you exit a liquidity pool at the same relative price of the two tokens, then you will have zero loss there in terms of the units you have of each of the two tokens. And so yeah, it's yeah, so you'd be fine from that perspective, right? It still means both could drop 50% or 90% or whatever, but you're gonna have the same number of units of each as you initially put in or more based on trading fees. But impermanent loss refers to essentially this idea or dynamic loss of moving along the curve, the automated market making curve used by Uniswap, and also SushiSwap and all these others that have kind of copied it. And that formula is X times Y equals K. So K is your constant. X is token A. Y is token B. And so the idea is that any divergence away from that initial kind of relationship between X and Y causes you've sold some out. And now what I'll say is that this is actually a pretty well understood concept in more traditional financial worlds, and what you're having happen here is you're essentially buying and selling an automated strategy. And so it's a great way of kind of averaging in, averaging out, without needing to set up a fancy bot or something to do it for you. So it means that as the price, in this case, as the price of PTF declines relative to the price of ETH, as has been happening, then you're continuing to effectively, as an LP, buy more PTF at an ever lower price. As the price of PTF were to move up against the price of ETH, you'd be gradually selling out of your PTF into ETH at an ever increasing price. And so it kind of automates that for you. But the idea, the reason it's referred to as loss is the idea being that if it moves, if you had not LP'd, if you just kind of had, if there's a significant price move and you just held both of those constituent tokens without putting them in, you would, in a kind of dollar denominated terms, you would be better off. And so it's fine as long as you're earning enough in trading fees to make up for that loss, or you're earning enough in rewards to make up for that loss. And again, in this case, because the rewards are additional PTF, you need to be comfortable with that, because if the price of PTF goes down, the dollar value of your rewards is also going down. But again, if you're viewing it as a strategy to stack more PTF, maybe you're comfortable with that risk. And so this is not saying you should do it or you shouldn't do it. It's trying to help you understand the reasons why you might want or not want to do this, and the risks associated with it. Somebody actually mentioned, balancer pools as being a potential way to mitigate this. And so balancer pools, instead of just doing the 50-50 balance, you can do kind of arbitrary balances anywhere up to like 98.2. And so for things where you're talking about an 80-20 or 90-10 pool or 95-5, right? You can have either a whole primarily PTF in that pool, or you could have primarily ETH or something else in that pool. And either way, large price movements don't result in as much impermanent loss. It means those pools have a lot more slippage for traders to trade against them, so they're not as attractive to traders at the same kind of liquidity levels. But it is a way that if you are especially bullish or especially conservative, I wouldn't say necessarily bearish, but conservative on future price, then one of those pools can be a much better way to do it. That said, I don't think the PowerTrade team has intentionally encouraged any of those pools, and there's such a relatively low level of liquidity in the Uniswap pool that is being rewarded. Unless you are an absolutely massive PowerTrade whale, you're probably not going to create a pool that generates a lot of volume doing there. And right now this is the pool that's being rewarded, and I think it makes sense, right? Because right now what we're trying to do is not provide what the PowerTrade team is trying to do right now is, to my understanding, allow for price discovery, allow for people to kind of move in and out. And the 50-50 Uniswap pool is excellent for facilitating price discovery. The highly skewed balancer pools are a little less useful for near-term price discovery.
One thing that Richard on our team, who is the has the most options trading experience in our team, he noted that basically a Uniswap LP pool is essentially a strangle in options. So you can actually model the LP rewards in the same way that you would model a strangle in options. So it's a yeah, I don't know. I find that interesting. As we're building out different options trading strategies, that we can basically reconstruct the yields of a Uniswap pool through strangles.
Yep.
And then getting over to a bit like the intention of a Uniswap pool, a market maker in general, their function is to.
Although I do want to, I don't. Is it a strangle or is it a straddle? I think
it's weird because it's kind of like it's not exactly either.
Okay.
Because it's kind of dynamic, right? It's not fixed at a particular price in that sense.
That's for point.
Yeah. It's kind of integral in a sense. And then just thinking about kind of the concept of impermanent loss over time, the function of a market maker is essentially to shift a trade over time, right? So if someone in Asia wants to sell an asset and someone in the US wants to buy an asset, but they're not awake at the same time, market maker basically just kind of shifts that trade over time algorithmically. And so when you're looking at market making time horizons, some like to do it over very short time horizons. They just want to provide liquidity. Well, I mean, for most of the time, they want to provide liquidity for as short time as possible because it's less risk to them. But in this case where you're seeing kind of a larger price trend in either direction, then you're essentially becoming a market maker. If you think that the price will return to where it was before, you're essentially becoming a market maker with a longer term time horizon, which is interesting depending on what your strategy is.
Yep.
Interesting. So yeah, you got to the balancer question. Yeah, I don't know. We can, unless there's more questions about staking and LP, we can answer some other questions as well. Oh, Brett just asked a good question. What do you?
Inevitable part of AMMs. Yeah, that is a hotly debated topic in the industry right now. My view is like the solutions to impermanent loss all come with their own trade-offs, right? There is no free lunch here. It's kind of an inevitable part, and we've seen there are various exchanges. So one thing you can do if you've got a stable coin pairs or BTC pairs or some things that are supposed to have relative parity in all the assets, and they should always return to roughly the same price using a flattened AMM curve like Curve is reduces risks around impermanent loss. You've also got some teams like what's it called? Dodo out of China and some others that are like trying to do this. Bancor is now trying to solve impermanent loss. They claimed they'd solved it with V2 and then realized that it was badly broken. And now they've got like a V2.1 that they're working on that they're claiming to solve it basically via insurance. And it's a really I don't want to try to explain it here because it's a little complex, but it's something that, yes, it kind of lets you provide single-sided liquidity and not have permanent loss risk in most scenarios, but it does create some real long tail like catastrophe scenarios. So it is amping up risk in other areas. So short answer, there's no perfect solution to impermanent loss. There are ways to dampen it in various scenarios, but there's always trade-offs for doing so.
What do you think about the Uniswap approach? They're not necessarily mitigating permanent loss, but they're mitigating or recapturing some of the front running profits that have been escaping from LP.
Look, I'm all for experimentation. I think it's I think Thorchain does a very similar approach to it as well. Yeah, they are potentially helpful, but it's all trade-offs, right? I think it depends how volatile stuff is, how deep liquidity pools are, how large size trades people want to make here, how it's competing against other trading venues. This is very much a multi-sided market, right? It's not just buyers and sellers of these token pairs. You've got buyers, you've got sellers, you've got LPs, and you've got arbitrageurs at the very least. And everybody has slightly different interests, right? The LPs want maximum trading fees and the least impermanent loss. And you've got traders who want to get the best overall execution price for their trades, and you've got arbitrageurs who want to make as much money as they can, kind of getting the kind of midpoint price back to whatever the overall market price is. And if arbitrageurs can't make enough money doing so, they won't. And then it's a worse experience for traders because they're more frequently not going to be trading around the kind of optimal market price. And then that's worse for the LPs because then LPs have less trade volume because traders are less confident that they're getting like the best execution price here. So it's a trade-off between these three parties, and Uniswap and I think Thorchain are both trying to skew it a little bit more in favor of LPs and to some degree traders with cutting out the arbitrageurs. But I think the net result is the prices will end up kind of like adjusting and moving a bit more slowly, which might be fine for some like large market cap coins like BTC and ETH. But for some smaller market cap things that move more rapidly, that may make it harder to be competitive with other trading venues.
Cool. We had a question from Harry about Bitcoin. Will Bitcoin become a serious player in the DeFi space? My take on that is that I think Bitcoin is Bitcoin. Like it's got this like digital gold narrative, and I think it's a very strong use case. And I don't know. I don't think that on the Bitcoin chain itself that they're going to make many changes. I don't think they have to. But Bitcoin as collateral and as an asset in an overall DeFi ecosystem, that makes a lot of sense to me, and I think we'll be seeing a lot more capital flows from Bitcoin into the DeFi space. What do you think, Dan?
I mean, I think it's you got to separate Bitcoin as a protocol or as a network versus BTC as an asset. I would say BTC is already very big in DeFi. I don't think we'll have meaningful DeFi applications on Bitcoin the way that we kind of think about DeFi applications. I do know some teams working on stuff, bringing some like DeFi elements onto Bitcoin directly. I think that's cool. I will actually be very pleasantly surprised if there proves to be a meaningful market for that. I hope there is, but I'm not expecting it. On the Ethereum side, though, we currently have like over $1.2 billion of Bitcoin is tokenized into WBTC, another 328 million in RemBTC, 71 million HBTC, 30 million SBTC, 60 million. Like we're just, it's kind of ramping up. So in total, there's over $1.7 billion in BTC tokenized on Ethereum. And the primary reason for doing so is to be able to use BTC in DeFi applications. So I think BTC is already very big in DeFi, and it's growing at an astronomical pace. Here, I'll actually even paste this nice tracking site over in the AMA channel, BTC on Ethereum. So you can kind of track there and see like the chart. It's just like one of those hockey stick charts that investors love to see. And in this case, you don't have to worry. It's not like the price of something is skyrocketing. It's just like you can just like see this massive migration of Bitcoin over to Ethereum or of BTC onto Ethereum. So I think it's very exciting.
That's pretty cool. I had not seen that chart. I remember maybe a year ago hypothesizing that when Bitcoin people found out what they could do in the lending markets with their Bitcoin on Ethereum, that this would happen. And so it's very cool to see it actually happening.
Oh yeah, absolutely. I think one of the bullish things for me was I don't know how many months ago this was now, but like with WBTC being collateral on Maker, and what was it was one of like the centralized trading firms basically brought in, it came in and like moved like $8 million worth of BTC into Maker and then drew out some DAI, and they were able to just capture this enormous spread, right? They were able to lend lend dollars like a much higher rate, and they were able to just borrow them for nothing from Maker. So pretty compelling when you start to see centralized firms who are offering centralized borrow and lend capabilities start to jump in there and say, oh wow, we can make use of these DeFi protocols.
We got two questions about wrapping Bitcoin. So one was what's the best Bitcoin wrapping service, and then there was also a note about RenBTC and the trust assumptions.
Yeah, I don't know about for RunBC. I don't know if it's all held on the CEO's private key, but I think there is a small number of multi-sig holders who effectively end up having custody as a result. I know that is not their long-term vision, but that is my understanding. That is the reality today. Is there's now 5 or something multi-sig holders who effectively end up controlling that. So that is a factor you should consider. That said, I did find the UX for RunBTC when I played around with it to be buttery smooth. And it's Curve has actually integrated it into their thing. So actually, I think that it's a risk with RenBTC if you're like holding RenBTC and exposed to it. But if you just kind of want to like swap in and out, I think that's a pretty minimal risk because unless there's like some exit scam at that moment, like you're kind of fine. But the Curve SBTC pool, you can kind of swap between RemBTC and WBTC and SBTC. And I'm not sure if TBTC is part of that yet also. But yeah, you can actually, they've got a Ren bridge hooked into Curve directly. So you can swap from BTC on Bitcoin directly into one of those other flavors of wrap Bitcoin using Curve, which I think is a pretty cool capability.
Oh wow! So you can do that all in one transaction.
So yeah, I think there's like I think there's like an extra approved transaction or something, but like yeah, they kind of tie together very nicely. If you want to wrap, if you want to do WBTC, like just kind of directly do it through a service, you kind of I think have to use a custodial service basically. I've used CoinList in the past. I think they charge 25 basis points to do the conversion. Fine. I may have seen someone down to 15 basis points, but you're gonna have to pay unless you're doing it like in some massive size where you can like go directly to one of these folks who can do it and get a discount. But yeah, I think the RemBTC fee is like 10 basis points or something for doing it, but it's like all on chain, no KYC. So yeah, there's a bunch of different ones, but I think it's healthy that we have a variety of options in the ecosystem, and as long as we have some of these nice AMMs like Curve, and I know there's some competitors coming up as well. Like you can swap between them pretty easily. I think it's healthy for the ecosystem to diversify our risk, because if something does happen to the security modules of one of these wrap versions of BTC, hopefully that won't take everything down.
Yeah. I was an early supporter of but backer of Ren back in 2018, and I do really love the UX that they've done there. It is true that basically the trust assumption with Ren right now is essentially the same as any typical crypto exchange, where there's a couple people that hold keys to what's effectively a multi-sig. Their plans are to have an MPC based service to do this all automatically. But I think that like everything decentralized, there's a trade-off between releasing it out into the wild and having it fully decentralized and having no way to fix things if something goes wrong. Or kind of starting out a little bit more centralized at first. But the Ren bridge is by far the best experience, as you literally get a Bitcoin address and then you send the funds there, and then the wrap Bitcoin or the Ren Bitcoin appears in your Ethereum address. And so that's like that experience is by far the most DeFi. As every other service, you have to do like KYC to mint them. But yeah, you brought up a really great point, which is probably the legal trust assumptions around wrap Bitcoin are stronger. You'll probably have more recourse with that since they've spent more time on that sort of custodial method.
Yeah.
And yeah, just swap it out in Curve.
Yeah.
Can you submit large buy orders on Uniswap? I don't know. What would happen if you submitted a 50K buy order on Uniswap for PTF right now?
That's a great question.
There's, I think, 200K liquidity in the pool. So
there's more than 200K liquidity, right? There's it's like 345 last I looked.
345.
346. Yeah, there we go.
Anyways, let's say, what is that? 12.5%, 12% of the total liquidity. So there would be a good amount of slippage. It would be similar to market buying on an exchange.
Yeah. So one tool for folks who want to calculate that, one of the handy tools. What was there was there was like where's the good impermanent loss calculator? So like one of the easy ones to use is it's pretty basic. It doesn't have full customizability, but if you go to CoinGecko, they've got like a yield farming tab, and one of the tools there they have is an impermanent loss calculator. And so you can select which type of AMM, Uniswap 50/50, Balancer 50/50 is the same, Balancer 80/20, Balancer 95/5, or Balancer 98/2, and you can change the weights of the assets. And see what the impermanent loss will be. It's not slippage, so not the same thing we're talking about, but it is something another useful tool that you can do. It's not too hard, and I would say generally, like, if you are going to be playing around and farming these pools, ideally you should be comfortable setting up a little spreadsheet for yourself where you can literally set up cells and do the formula of X times Y equals K, and look at what will happen and calculate the price off that, and calculate where the new price will be if you were to swap a given amount of one token for the other. So I would encourage folks to experiment with setting up their own spreadsheets to do that and do that calculation, because it'll help you get a much better feel for both slippage and impermanent loss.
Are there any other tools that you use for kind of managing being an LP or staking pools or anything like that?
Yeah, I think overall, I use both Zapper and DBank, DEBANK. Let me just make sure I got the right domain. Yeah, dbank.com, and Zapper is zapper.fi. Both of those have nice kind of portfolio overviews and some good tools. They, they're still bounded by like which farms they've manually kind of added to tracking, but it can be a good way to get an overall good view of your portfolio, or at least of a given address. Trying to think of what else I use on the yield farming front. Yeah, that's a pretty good one. I mean, CoinGecko has got more and more stuff. CoinGecko has kind of replaced CoinMarketCap as my go-to site for keeping track of markets. When I'm doing deeper research, I will often go to Masari, which is in my experience has been more helpful for stuff that's been out for a little bit longer. CoinGecko is probably the fastest in terms of getting new assets listed. Masari tends to have a bit more depth for assets that have been around for a while. And yeah, I build spreadsheets using the CoinGecko API is pretty nice. Not always incredibly up to date, but they've been working on it. It's been getting better. Yeah, there's some of my go-to resources.
Cool. I'm just grabbing all those links for people. Let's see. Sorry. Somebody asked a question about the sustainability of DeFi in the next 3 to 6 months, which also ties into an earlier question about the hype with DeFi and kind of the craze, and then things kind of settling down. I don't know. You want to talk a bit about that? I've got some thoughts.
Sure. I think it's. I actually like it when the crypto markets are calmer. I think anybody who's here, been here for a while or plans to be here for a while, like those kind of quiet periods are really good for building. And then when stuff starts getting nuts, everyone gets distracted and is focused on price, and it's harder to really move things forward. So if we are in a little quiet period again, that would be nice. I kind of suspect we're not for very long, but who knows? I don't think that yield farming is going away. Yields certainly have come down, but I think people not YOLOing into like crazy degen farms is a good thing. I think teams generally have not optimized their yield farming programs to meet to best meet their goals, and I think teams are starting to get better at doing that. And I think that investors and I would say more short-term speculators are also just getting a little bit more savvy. But I do think that if you're being thoughtful about yield farming opportunities and honestly kind of full time on it, or for some of these different services that are coming up, Rary and some of these others that are trying to like automate yield farming, like I do think that somewhere in the neighborhood of 20 to 50% APYs we are something that we will see over the next couple years. I don't think we're gonna really drop much below that. It's not going to be like super easy, set it and forget it. But I do think that there are going to be meaningful projects that have significant distribution through some of these kind of liquidity mining programs, and that they will offer very attractive yields. And I also think that there's two ways to look at it, right? What's just like the dollar yields you're going to get here for some people who want to like essentially be dollar denominated. But then I think the real power of some of these programs, if they're designed right, is that we can, it can, if done right, it can get tokens into the hands of people who are long-term believers and can help bootstrap the ecosystem early. And it's a way also, if you're trying to take a position, right, if there's not otherwise a lot of liquidity and you're saying like, well, how do I get into a position? Yield farming can be the most cost-effective way to do it, right? Like if I wanted to come in and take $100,000 position in PTF today, like yikes, that's going to be pretty, the amount of slippage I'll experience on that trade is pretty painful. But if I want to take $100,000 position in PTF today via yield farming, that's probably a way that I can do it, gradually over time and get these rewards and build up to that position, while also supporting the development of the ecosystem by adding to liquidity. So I think, in cases like that, it can be a win-win. But yeah, we need to see, I think, a little bit more of that type of activity.
It's interesting that you say you think that the yields will kind of settle on 20 to 50% for kind of, I don't know, midterm, next few years. That's roughly what venture firms target as their rate of return.
Mm-hmm.
And so, and I think it like, that kind of risk adds up. A venture firm generally is making, say, 20 bets, and they're looking for one of them to do very, very well, have a very high rate of return, and maybe the other 19, maybe 17 of them return nothing, the other 3 return just a little bit, and it all tends to average out to if you do decently well, to the 20 to 50% range. So for a riskier kind of asset class, I think that's that number makes a lot of sense.
Yeah, and I think that's assuming you're kind of doing dollar denominated, like trying to be relatively like risk neutral
Yeah,
with your trades. Um, if I think a lot of people, if you're kind of a crypto native, trader or investor, or just like ecosystem participant, like I'm guessing if you're listening on this, you're probably long crypto to some degree, right? And so, there's going to be a significant amount of variance where like we've been on the Bitcoin and the ETH roller coasters, right? We've seen them go up and down a lot. But if you're kind of long term exposed to the sector or exposed to specific assets, and you can add additional yield on top of that, it seems great, right? Like I love just holding Bitcoin. Like I'm pretty bullish on Bitcoin and ETH, longer term. But so if I can get yield on top of stuff that I was gonna just be holding anyway, yeah, I'll take it.
yeah. Yeah, I mean, I think some for people that are holding USD, also the stablecoin yield farming opportunities are quite attractive because it's basically like, all right, you put some stable coins in like Curve and you earn some Curve tokens.
Yeah, although
Yeah,
what I'll say is going to be something that I hope people are able to use PowerTrade to do is if you're a bit more of an advanced trader, what you can start doing is you can actually construct more of a risk neutral position using options, right? And so
that's
you
right.
can you can be farming with things that aren't stable coins, but then using options to hedge those positions, you can capture some of the higher yield opportunities that may exist, but still kind of hedge yourself out so that you're neutral in dollar terms.
That's absolutely right. Why don't we construct an example of that? Uh, maybe let's use sushi as an example. Uh, how would you construct kind of a risk neutral sushi farming portfolio? Sorry,
Well,
sorry to put you on the
yeah,
spot.
no, so
Can be
I'll
complicated.
I'll be totally honest here. I'm not the guy on my team who's going to construct
Got
that
it.
tree.
Got it.
Yeah. I my I'm like an introductory level of knowledge on options trading specifically, right? When we've got other people who are more familiar with options trading on the team when we were looking at investing in PowerTrade, and Tom, I've known you for a while and familiar with the team, and I was looking at it as a more of a venture investment, but actually trading options is not something that I feel qualified to do.
Got it. Got it. So I mean, there was a large firm that was taking this position, and they essentially went into the sushi ETH pool in very large quantity, uh, and because the essentially the Uniswap LP is a strangle, right? You can hedge that by taking uh, it's a short strangle, so you can go long both assets on another exchange, and then they were earning, what was it, 3 times as much in sushi rewards as well, and so they were hedging out the profits from sushi without having to sell it by shorting sushi. So they're essentially lending their sushi uh, and taking a short position on it. So that was very interesting, and I believe you could accomplish that by uh, writing options. So you can create an inverse strangle on the Uniswap pair, and then on the sushi itself, you can write. What would you be writing there? If you're short, then you would be writing calls, and if you have the sushi, you'd be writing covered calls, um, depending on the strike. But yeah, it gets a little bit tricky, but it's completely doable to kind of farm and hedge at the same time.
Yeah, thanks for the
Um,
walkthrough. Hmm.
Yeah, I you've just given me a great content idea on particularly on a structure that we
Yeah.
can
Yeah,
set
definitely
up for
write that
people.
up.
Yeah, with
If you can,
more detail.
yeah, yeah, and doing it with screenshots of the product would probably be even better.
Absolutely, yeah. Yeah, there's this classic thing in options, which is like the payoff graph. So
Yep.
there's like the limited loss and then the upside line, and so you end up that's why in options you have all these crazy names like iron condors and butterflies and stuff. It's because the payoff graph, when you structure all these different options together, they look like a condor or like a butterfly or things like that. So yeah, that will be yeah, something to look forward to. Who is PTF's biggest competitors? So PTF is a token, and it is an alternative to insurance funds. So there's PTF, and then there's the PowerTrade exchange. PowerTrade exchange, our clearest competitor, our biggest competitor is Deribit. Deribit does the majority of the trade volume in the space, but they're very focused on very professional and institutional traders. So you can check their product out, but I suspect, as most of us have found, it's quite overwhelming, as it has like all of it's like if you've ever gone in an airplane and you go into the cockpit, there's like all these like knobs and all these things you can do, and you're like, wow, I need like a degree in order to like operate this airplane. Um, and so we're trying to like create a much more simplified version. Basically a Call of
Yeah,
Duty
it's like
video game airplane.
it's
Uh,
like it's
yeah.
scary. It's scary how smooth it is. Like when you were walking me through it, I was like, oh, I could do this. Oh, I shouldn't do this, but I could.
Yeah. So yeah, that's Deribit. They have most of the options trading volume right now, and there isn't really anyone who's doing a good job at kind of making that easier for people to comprehend and trade. And so that's kind of the open area that, as PowerTrade, the exchange, we're going after. Dan, are you aware of any insurance fund alternatives in DeFi?
Uh,
Uh,
I mean, not for. I think the interesting is like it's an insurance fund for like a centralized exchange,
mm,
which is not something that I've seen elsewhere.
mm,
Um, I guess insurance, like the biggest thing right now is Nexus Mutual, but that's like smart contract insurance.
yeah,
So it's a little bit different. There are a lot of folks working on various flavors of insurance and DeFi. So I think we're going to see a kind of explosion in that. Open is doing DeFi options, and they were initially positioning themselves as kind of insurance because put options are, I guess, a form of insurance in some ways.
insurance on the
So
price.
yeah, insurance on the price. Yeah. So I haven't seen anything that looks like kind of PTF in the way that trying to create this insurance fund around it. So I think it's very intriguing. It's a hard thing, and I think the only way to bootstrap something like this is to pair it with a successful exchange. So the hopefully the PowerTrade platform will be successful and will help bootstrap this, and then it will be interesting to see how PTF can expand out from there.
Yeah, yeah, I agree. And we've got some hard problems to solve around expanding it to other exchanges, but I think we can prove it out. I will say that our kind of one of the inspirations for the structure is MakerDAO. So if you can think of what the insurance fund on an exchange is essentially doing is ensuring credit risk. If people are trading on margin, they're basically getting a line of credit, and if their collateral is not able to cover any shortage, if their position turns against them, it's you have this credit risk and there's a shortage and the collateral is not able to cover it, right? Now Maker MakerDAO is essentially also a credit facility, right? And so they have a similar system in that sense, in that there's a liquidation process to liquidate collateral, and if that collateral becomes less worth less than the debt, then the MKR token itself is responsible for covering that debt. So they don't have a fund per se, but they do dilute themselves in order to cover that debt if it comes to that. And then so that is one of the mechanisms that we built into PTF as like the ultimate backstop. If all of the other plans, there's many steps that you'd have to break through in order to get to this point. But if everything else fails, we have that Maker's MKR style backstop of the token itself.
Yeah, I think it's very cool. I think more protocols will start building stuff like that natively. But it's really cool to use this as a way to extend to things that don't have that native capability.
Do you guys can hear us?
Yeah, that's an interesting point. Yeah, it'll as DeFi and CryptoFi grows, I think it'll become more and more important.
Hello, guys.
Yeah. Any parting thoughts?
So someone's trying to ask a question.
DeFi Bull has a question.
No. Okay, I was just hearing somebody off mic.
Can you hear me?
Yes, we can.
Oh, okay. Hello, and thanks for coming, Dan. And hello. I have a question for Tom.
Off mic. I think we're the only ones that can speak right now. Yeah. Any we've got 1.5 minutes left. Any parting thoughts for us?
No. If you farm safely, know what you're getting into. I think I'm very excited about PTF and about PowerTrade, and I'm looking forward to seeing the app get out there and get in people's hands.
Awesome. Well, we're super stoked to have you guys supporting us, and thanks a lot for taking the time to come in and chat with the community. And I think this went decently well. So we'll probably be doing more things like this in the future.
Awesome. Yeah, bring some smarter guests next time. All right.
All right.
Thanks,
Cheers.
Tom. Thanks, folks. Bye.